Hi everyone, welcome back to your channel. Today we are diving into the most important story after two consecutive days of heavy selling pressure in gold and silver. Global investors stand strongly on Thursday, helping both metals recover with solid momentums. Renewed geopolitical risk significantly boosted safe haven buying, while traders also positioned themselves ahead of Friday's critical US CPI inflation data. Top Wall Street investment firms including Goldman Sachs and JPMorgan Chase believe that gold's rally, which has repeatedly touched record highs this year and already surpassed 4,000 in $4 from over. According to them, short-term pullbacks are merely phases in a long-term bull market. They emphasize that investors should look ahead as gold could potentially break through the $5,000 level in the coming years. The recent surge in global geopolitical tension has been a major catalyst for gold's strong performance. Reports suggest that European Union renews sanctions against Russia along with the US President Donald Trump's new round of sanctions targeting Russian energy giant Lukoil and Rosneft have catch markets by surprise. The Trump's administration is also considering a response to China's rare earth export restriction, potentially limiting a wide range of software-driven export to China. International gold prices, both spot and futures, have been rising consistently this year with a sharp rally over the past few weeks. On Monday, gold reached another record high as investors short safety and amid global trade tension, currency depreciation, fears, concern about slowing global growth, and Trump's economic policies that some believes are weakening the idea of American expectationalism. However, on Tuesday, bullish sentiments in gold and silver suddenly reversed, pushing global gold price lower. Spot gold fell as much as 6.3% intraday, marking its biggest one-day drops since April 2013 before setting 5.3% lower at 4,123.85 per ounce dollar. December gold futures also dropped 5.7%, closing at 4,109.10% dollar, recording their steep best single day fall in over a decade. Despite these sharp corrections, analytic believes gold still has room to grow. Historical data shows that such one-day drops of 5% or more have rarely led to sustained bearish trend. In fact, Dow Jones market data revealed that since 2006, gold futures have gained an average of 1.8% 1 month after similar declines. Experts like Stephen Gleason, president of Money Metals Exchange, note that investors should not expect gold and silver to rise in a straight line. He describes such sharp corrections has healthy and beneficial, reminding that bull markets are often built by climbing a wall of worry. Traders are now closely watching Friday's U.S. Consumer Price Index (CPI) report for fresh signals on inflation ahead of next week's Federal Reserve policy meeting. Markets expect the Fed to continue its rate-cutting cycle given steady inflation and a cooling labor market. Meanwhile, JPMorgan Chase remains strongly bullish, forecasting that gold could average around 5,055 per dollars ounce by Q4 2026. Nashata Kenya, JP Morgan's head of global commodity strategy, said gold remains their most reliable long position for the year, especially as the Fed enters an easing cycle. Goldman Sachs also reformed its long-term bullish outlook, maintaining its $4,900 year end to 2026 target and highlighting that upside risk remain. The firm believes the recent sell-off was driven more by self-related liquidation than weakening fundamentals. It expects long-term structural demands from central banks, high net worth investor, institutional allocators to continue supporting prices. According to Goldman sensitivity global model, even a 1% shift to private US Treasury holding into gold up would push spot prices toward 5,000 per ounce dollar. The gold market remains relatively small compared to Treasury, meaning even small capital allocations can have significant price effect. Adding to the bullish sentiment, Bank of America has gone even further, forecasting that gold prices could reach 6,000 per ounce dollar by next spring. The bank points out that golds currently present only a small share of total institutional and private portfolios, suggesting there's still plenty for room growth. Other precious metals are also gaining attention, especially platinum. London platinum price surged 6.4% on Wednesday to around 1,650 per ounce dollars, their largest intraday gains since 2020. Analysts like Daniel Galley of TD Securities warned that platinum market is facing extreme tightness, potentially leading to a silver stock secures. With these ongoing developments from geopolitical shocks to policy shift, gold and silver may continue to show volatility, but the broader long-term picture remains strongly bullish. Thanks for watching. Don't forget to like this video, share your thought in the comments, and subscribe to the channel for more updates. Thanks.